Just give us your thoughts here then on the mix of reports that we've had from Microsoft on its different product lines. How do you think that sets the business up for the rest of the year?
Well, from my point of view, the most important bit of Microsoft is Azure, the public cloud business, because I think that's where the greatest opportunity is. And although it's the number two player behind Amazon on this, to my mind, it's better positioned for the bulk of the market, the big enterprises which are transitioning now to the cloud. They've had Microsoft as a supplier for decades, whereas they're very cautious about Amazon, the leader, and Google, the number three, which are very different types of business. The stock was initially down after hours on the results last night, possibly because the Azure business, the public cloud business of Microsoft, maybe didn't grow quite as fast after adjusting for currency as people expected. That was still 46% a year, so that's still very good growth for a huge business. But then we had the management call afterwards, and that seemed to reassure people that actually the growth wasn't decelerating. They were saying they expect another sort of mid 40% growth rate in the current quarter, September quarter. So that has reassured people that this business, which is the real key to Microsoft going forward, is actually remaining very, very strong indeed. And it's extraordinary a business of that size can grow at 45% a year.
I think it's almost inevitable that any business that benefits from an increased pace of digitization as a result of the pandemic we've experienced over the last 15 months, almost inevitable that these businesses are going to have done well over the current quarter and probably will do okay for another couple of quarters. But is there a risk here that there is something of a cliff edge around that pace of cloud adoption, as companies perhaps become a little less concerned about the outlook going forward as the world normalizes?
I don't really think so, because I think the pandemic really has opened the eyes of even the most conservative IT departments and senior management to the flexibility that the cloud offers. We don't know what the next catastrophe is going to be around the corner, and when it arrives, if you've got a system on the cloud, the chances are you can respond much more rapidly and more flexibly to it. So the extraordinary acceleration of last year cannot possibly continue, but at the same time, I think that's a one-off sort of step up in adoption for all sorts of different areas of technology. And then we're back to this sort of mid to high teens growth rate for tech that we've seen for the last 11, 12, 13 years or whatever. So I don't see a cliff edge at all.
William, we throw out terms like regulatory risk and taxation risk at the tech companies in a very broad brush stroke as well. But being more specifically, of the big tech companies that you follow as well, which ones have got the greatest regulatory or indeed risk of higher taxation?
So I say regulatory risk, sort of one end for the mega caps would be Facebook and Amazon. And at the other end of the extreme would be Microsoft, which to me has the lowest of the really big obvious names. It went through that, 15, 20 years ago. And it's come out the other side. It knows how to deal with government and it doesn't expose itself in the same way. Whereas to me, Facebook is very, very exposed. And Amazon is just a whopping great target that lots of people want to kick. And there are possible remedies that people might be asking for against sort of potential market abuse or dominance there. So I'd say Facebook and Amazon are the most exposed.
But on the Amazon front, I suppose one could construct an argument that if they are forced to break up, then the sum of the parts might be worth more than the combined company as well. So this idea that actually the regulatory risk and a breakup of a company would lead to downside, that could be misplaced, yeah?
Well, it depends how you break it, doesn't it? So everyone seems to be focusing on breaking Amazon up into the marketplace and the cloud and separating the two. There's absolutely no point in doing that whatsoever. That doesn't benefit anyone. The bit that people are complaining about is the behavior of marketplace. And I'm not saying this is correct, but if Amazon is abusing its position as a marketplace to also outcompete unfairly some of its suppliers, then the obvious way to deal with that is to separate marketplace into two elements, and you have a first party and a third party, and they become separate businesses. And then Amazon can't look at what's doing well from one of its suppliers, one of its retailers, and cut them out by undercutting them, because that would be a different business. That would be the first party business. So that to me would be the obvious separation if you were to do one, and that potentially would be quite damaging for Amazon. But as you say, sometimes breakups do end up in creating more value for investors because they do, on the sum of the parts, maybe the businesses are more valuable. I think, but for Amazon, I don't see why anyone was separated into cloud on one side and marketplace on the other. That doesn't make any difference at all.